I mean, it was next to a children's gymnastics center, a custom closet custom closet designer office. And when I went inside, it's a lot of cubicles. It's very small. It's just got a brown carpeted. And for most of the time, they're mostly validating other people's hardwares. They're not actually inventing their own. They didn't have a product arm. In fact, their product group used to report to marketing or the IT department. It was really about building, sales channels or web tools to make things easier for their installers, but they didn't have really a design group. As their CTO told me, we've never done an industrial design of a product before, which is, for someone who writes a lot about Silicon Valley, pretty shocking to hear at this point in 2022.
So, what makes this story kind of amazing, though, is obviously, ADT in a heist issue. That makes sense. And I'm really excited that, the heist issue is rolling out this week, and this is the first installment of that. But there's also this element within this story, Austin, that it's like you set up what could be a heist within a heist, which is the best kind of heist, as you know from prior heist excursions with us, which is basically like AT&T is getting into business with someone that maybe eventually doesn't need them. How does the company tackle something like that?
So ADT actually spells that out in their 10K risk factors. They do note that one of the ironies of this big partnership, which involves Google taking a $450 million stake in ADT, is that Google could just end up a major competitor if they decide to offer their own security services and sort of supplant the ADT subscriptions that they offer directly to customers. And that's a huge risk. I mean, to be honest, I did go on, one of the things, Joel, that I don't know if you're aware of this, but you had me go do was go on a ride-along with installers and spend hours with them setting up security equipment in someone's home in Florida. And it was just fascinating to hear the sales reps pitch all these Google devices. They wear Google shirts. Their ADT trucks will soon have Google logos on it. And it's so quite clear to me that they've gone all into this Google partnership because it really gives a new sheen to the brand. And for Google, that's great. If it works out, they have a big stake in the company. But if not, guess what? ADT reps have spent years or the foreseeable future installing a bunch of Google devices in people's homes, which they can eventually tap into for Android or Nest or Google's ecosystem.
It is a great read. It's a great issue. We all look forward to it every summer. A great summer read. Austin Carr, a Bloomberg News tech reporter, and of course, Joel Weber, editor of Business Week.
countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close, just 60 minutes left in the trading session. Caroline Hine, Romain Bostic, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. The band is truly back together today. We welcome cross audiences, of course, TV, radio, YouTube, to dissect, well, the worst day for the S&P since June 16th, Carol.
Yeah, investors not looking to place bets on most parts of the equity market. Where they are, though, check out some of the casino stocks. This group as a whole up as much as 5% earlier. Wynn, Las Vegas Sands, among the standouts. This group, as I mentioned, up more than 5% earlier, still holding on to a gain of about 0.8%. But this is China announcing it would loosen travel restrictions for international travelers. So that, Tim, we did see some movement into.
Well, we're seeing movement, but to the other side for consumer discretionary stocks today, the worst performers in the S&P 500 right now. We're talking the likes of Amazon, Tesla dragging down the index, Nike, Home Depot as well. Like much of the equity market, they did start the day in the green, but they fell after we got that data from the Conference Board showing that consumer confidence dropped in June to the lowest level in more than a year.
And that really does seem to have sparked that risk aversion trade today. Let's have a look at it. 1.76% lower on the S&P 500. We're down 69 points, let's call it. The Dow also underwater by 1.3%. We're seeing the NASDAQ low. Truly, the big tech trade is the area of most selling. 2.6% on the downside, 300 points lower. And the Russell 2000 too, off by 28 points, Taylor, 1.6% lower.
You really see that on a sector level, the rotation back into really what's been the story of the year. Energy in the lead for the day and the year. You're up 2% or so. Utilities still to follow, mostly unch on the day, a little bit lower here for the year, but those two firmly in lead when you think about the long-term perspective. And indeed another long-term perspective, which is technology and discretionary, of course, down at the bottom on the day. You're off 2.6 and 3.6% respectively.
Yeah, tech and discretionary leading the declines today, leading the declines for the month, and quite frankly, for the year. Always a reminder here that Apple remains in bear market territory, down about 22% from its all-time high, down 2.5% here on the day. To the flip side, though, we're actually seeing an interesting bid come into Qualcomm. Those shares up about 5%. Remember, Apple was working on its own sort of modem chips to put into its phone. This was a multi-year process that had been going through that a lot of people thought would come to fruition this year. There's a report here out of a blog, a very well-respected blog out of Asia that says that Apple apparently is not going to meet some of those targets and that Qualcomm will likely remain a supplier for the iPhone, at least for those modem chips, at least through 2023. Carol, you did bring up China. We talk about Wynn Resorts and the casino stocks. Pretty much all the travel stocks right now with any sort of international component are moving higher. But then we had those Nike earnings yesterday, which I thought were interesting because they talked a lot about their China business, and apparently there's not much business there. Down 20%. They said about 60% of their business in China had effectively been affected by the COVID lockdowns. And then, of course, there's all the issues with sort of the growing nationalism around sort of wanting to, sort of embrace Chinese brands and not Nike for a lot of variety of reasons we don't need to get into.
And therefore, we saw plenty of price targets on that particular stock after the earnings. And all of this speaks to perhaps an interesting take. Elena Pepino writing about this for Bloomberg earlier, that S&P analysts haven't been actually this bullish. Yes, bullish. In 20 years. This is a scale 1 to 5, in which 5 is a buy, 1 is a sell. Companies in the S&P 500 have an average consensus rating of 4 for our radio audience. We're looking at a chart basically saying this is the highest reading since 2002. Usually when stock markets fall, analyst projections, they tend to decline, but at the moment the opposite is happening, Carol.
All right. Oh, go ahead.
I'm sorry. Wasn't there like a Goldman Sachs analyst basically saying that that all these analyst estimates are way too high, at least when it comes specifically to profit margins, and that they're going to have to come down once we get into the earnings season in about 3 weeks.
Yeah, I think it was Shalit over at Morgan Stanley yesterday who said that.
Yeah, and another note out actually yesterday from Goldman Sachs as well. So yeah.
All right, so there's lots of opinions out there. Speaking of opinions, Morgan Stanley's... You're welcome.
What's your opinion?
Well, speaking of opinions, Morgan Stanley's chief U.S. economist Ellen Zentner was on Balance of the Power with Joe Matthew earlier, and she said, recessions, they're inevitable. The thing is, how long ultimately do they last? Here's what she had to say.
I think shallow. I think the duration is still very much in question. Now, I say shallow because you don't have a deleveraging cycle on top of a recession. That's very different from how we entered the financial crisis.
So what she's basically saying is that deleveraging cycle that we got coming off of the financial crisis, that's not happening. That household balance sheets basically are, locked in at a fixed rate. And then if you look at corporates, they've already refied at a low rate, and that's going to be in place for several years. So we don't have that component.
Yeah, and her comments are very smart there, and we should point out that a lot of other folks have pointed that out, particularly when it comes to the health of the consumer. Yes, maybe you'll see a tamp down in confidence and even a tamp down in spending itself, but sort of that fall off the cliff moment that we've seen in past recessions, at least based on the data we have right now, it doesn't appear to be in the cards.
Well, that's what's so interesting. It's, not necessarily watching what consumers are saying about how they're feeling, but watching what they're doing. And we did see in the data today, and we're going to get, retail data soon. That this isn't retail data, this is still sentiment data. But the idea is that, they've pulled back a little bit when it comes to spending on vacations, but still a portion of consumers, a higher portion than last month, are saying they're going to make big purchases, like a vehicle or like a washing machine or some sort of other appliance as well in the next 6 months, if they can get it.
Tim, I'm glad you brought that up because I've been reading some notes on that too, that you have to watch what we do, not what we say. We've all been talking about some of the doom and gloom, but Caroline, when it comes down to it, some of the actual hard data, not maybe the soft data, still looks actually pretty firm.
And maybe we need to do the opposite for the Fed and for the central bankers, is what they say rather than what they do, because we've got a lot of what they're going to be saying tomorrow. We've got Fed Chair Powell with our own Francine Lacqua, I think, a little bit later on tomorrow. We've got the head of the ECB on that particular panel as well. How much are they managing to jawbone the market, jawbone retail investors as well, enough to think that actually they've got to control inflation, take them seriously, and actually remain confident?
Well, I mean, there was another great note out this morning that kind of talked exactly about that point, Caroline, and the idea that the Fed is trying to guide expectations somewhere in that sort of 4 to 5% range on inflation. If they can get consumers down there, that provides a little bit of a clear path. And just to circle back to what Carol said, too, I mean, there is a big distinction between a consumer's willingness to spend and their ability to spend. And I think that's a distinction that Ellen Zentner and some people are trying to draw here, that the capacity to spend will be there. Now, the willingness, that's a whole nother question.
Well, and what's interesting, Ellen went on to say is, take a look at some of the economic data points. It does look like we're starting to see a lot of trend lines in terms of them peaking. The problem is, just look at the jobs market. We're still creating, 300,000 jobs every month, that it's going to take a while for that to come down ultimately, as a result of some of the Fed moves and maybe the economy coming down. So that also means it's going to take a while for inflationary numbers to come down as well. So we kind of have to be, I guess, a bit patient. All right, we're going to be back in less than an hour's time, live on TV and radio and on YouTube at 4 p.m. for our cross-platform coverage. Beyond the Bell, we'll take you through today's close on this Tuesday.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
You are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, live here at Bloomberg headquarters in New York City. It's interesting. Ellen Zentner, though, also went on to say that she thinks, while a recession is inevitable, we see them, it's all cyclical, right, Tim? That the thing is that it's going to probably not happen by the end of the year. And I mentioned, kind of squeezed in at the end there, what she said is that it's so slow to slow the economy enough to get a negative jobs gain will be tough before the end of the year, especially when you're still creating 300,000 jobs per month. So, she's looking at the numbers. I feel like you've got to look at the data that's out there to kind of figure out kind of where and when the economy goes next.
Okay, two things I wanted to talk to you about. One is, these are economic cycles. That's why they're called economic cycles, because they're booms and busts. And, a recession will happen. We just have to figure out when. That's the first thing. The second thing is that you mentioned the problem is that we're still creating jobs, which I thought was a really interesting thing to say. Because if you're looking for financial conditions tightening, if you're looking for a softening of the economy, then we need the job market to slow down.
Right.
And is that, and Steve Matthews made this point last week on our air. He reports out of Atlanta for Bloomberg News, reports on the Fed and the economy. And he said, every month we're creating 400,000 to 500,000 jobs. And recessions do not happen with that job growth.
Exactly. So this is why, when it comes to the timing of this, it's going to be tough. Wasn't it Larry Summers who told, I think, or David Weston perhaps, that said that in terms of the jobs, unemployment, that we might need to let that get higher than normal, because you've just got to kind of rein it all in and to help bring down some of those inflationary pressures, because wages certainly plays into those inflationary pressures. Or, people have jobs, they feel confident about it, they have incomes, they have salaries, they're going to keep on spending.
All right, so more data we're going to get it this week, and next week, of course, is the jobs report next Friday.
which you will like phone in and call from your
I'm
vacation.
gonna keep up with it on my Bloomberg mobile app.
I'm going to look for your text. All right, we're going to get back to the markets in just a moment. Right now, though, we do want to get an update on world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. The House committee investigating the January 6th invasion of the Capitol has been hearing how President Trump's thwarted desire to head for the Capitol after his speech led to violence. We get more from Bloomberg's Irv Chapman.
Cassidy Hutchinson, the top assistant to the chief of staff, testified that Trump was irate when his lead Secret Service agent, Bobby Engel, said he could not be driven to the Capitol himself because it was not safe.
I'm the effing president. Take me up to the Capitol now. To which Bobby responded, we have to go back to the West Wing. The president reached up towards the front of the vehicle to grab at the steering wheel. Mr. Engel grabbed his arm. Mr. Trump then used his free hand to lunge towards Bobby Engel.
Hutchinson was quoting the description of a shocked staffer riding with Trump in his limo, corroborated to her by Engel. In Washington, Irv Chapman, Bloomberg Radio.
Health and Human Services Secretary Javier Becerra says his department will work to assure abortion availability after Friday's Supreme Court decision overturning Roe v. Wade. Becerra criticized the court's decision and says he'll make sure the abortion pill is accessible.
The Supreme Court's decision will result in worsened health outcomes and death for some patients. Working to increase access to this drug is a national imperative and in the public interest.
Becerra says HHS is directing agencies to ensure all healthcare workers are well trained in providing family care. A sentence of 20 years has been given to Ghislaine Maxwell, the judge saying she caused incalculable damage to the young girls she trafficked for Jeffrey Epstein. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our D.C. newsroom. Carol Masser, Tim Stenovec here at Bloomberg headquarters, our Interactive Broker studio, and our BTV5 studio, and on YouTube. Let's talk a little bit of real estate. Where do you want to start?
I want to start with the idea that you are in luck, Carol, because if you are looking for a new place, perhaps in New York City, maybe the Hamptons, maybe South Florida, where a lot of people are moving, $10 million plus homes we're talking about, okay? There might be a buying opportunity.
Because it's slowing?
Because it's slowing.
So they're on sale, so maybe they're, what, $9.5 million?
Yeah,
9
maybe.
million?
Exactly.
Let's buy a couple. Let's buy a pair.
It's a buyer's market, Carol.
You know, it is, though, an indication of a market slowdown. The number of signed contracts declining in comparison to the first half of 2021. This year's first half brought 127 contracts for homes priced above $10 million in New York. Last year, 161 contracts were signed in the same period. That's a pretty decent drop.
Yeah, Garrett Derderian, the director of market intelligence at Serhant, who compiled the report, said, quote, there is international investment, but it's not at the level it was pre-COVID. We're still seeing a pullback from Asian buyers. That's really interesting because a lot of these, ultra luxury, ultra expensive homes do get snapped up by the international buyer. And of course, during COVID, when it was difficult for people from other countries to get to the United States, to travel internationally, we did see that buyer slow down.
I love this story in that when it goes a little bit deeper into the Hamptons, says, despite ominous clouds on the horizon, the vacation destination on the South Fork of Long Island recorded a sunny first half of 2022. 32 sales above 10 million and 11% increase over the same period last year. Median price increased during the same period. Check this out, Tim, from 13.5 million to 14.7 million.
Okay, the super luxury South Florida market has the opposite problem. The reality is far more bullish than the numbers on paper would suggest. Got some data here, too.
I have to say, I know people buying and selling out in the Hamptons and Long Island, so it's where people want to go.
Not me. I mean, I would go there. I'm not buying or selling.
Not yet, at least.
No.
All right, folks, you're listening to Bloomberg Business Week. Carol Masser, Tim Stenovec, more to come in just a moment. We're talking Uber.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Sell-off getting uglier. We're very close to session lows. 43 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ all down, and that NASDAQ 100 index down now by 2.9%. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are under pressure today, helped by that 7% drop in Nike. Dow is currently down 456 points. S&P has dropped 73, while NASDAQ is down by 320. The U.S. 10-year yield at 3.2%. Gold is little change. Oil is climbing, but Bitcoin is down by 2.7%. Among the main 11 S&P sectors, only energy was in the green, and leaders to the upside in the Dow, Chevron, Travelers, and Boeing, while Nike did fall 7% after earnings and led to the downside. In other news, Goldman Sachs sees losses topping $1.2 billion from its consumer push, and Qualcomm spiked intraday on a report Apple will keep using its chips. Wrapping things up, AeroVironment reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Hey, we thank you very much, Bill, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet, and that is the Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by Informatica. In the cloud, your data has the power to do the extraordinary. Manage data across any location in the cloud for accurate and actionable insights. More at Informatica.com.
All right, Tim. Well, shares of Uber trading lower today, down about 3%. I mean, in an overall downward market. Lyft too, for that matter. This is some Uber and Lyft drivers, Tim. They're finding that renting or buying a Tesla, the luxury electric car, we all know who they are and what they do, is a more profitable option now amid soaring gas prices that have upended the economics of gig work. Every time I get into an Uber, I talk to them about, are you know?
Have you gotten in a
yes
a Tesla one?
Yes,
oh, wow,
actually several, but over like the last couple of years. But I ask them all the time. I'm like, why aren't you getting an electric?
That's a good question. Well, California versus New York, I think, is a big question here. Molly Schutz is technology editor here for Bloomberg News. She's with us in the Bloomberg Interactive Brokers studio. She edited a story by Jackie Davalos about Uber and Lyft drivers switching to Teslas as gas prices squeeze profit. It's so funny that Carol brings this up, Molly, because you and I were having this exact conversation during the break about New York versus California, because Jackie, in her reporting, got some great examples about Uber drivers switching to electric vehicles. And it's happening in a place that many would suspect because gas prices are particularly high in my home state of California.
Yeah, they are. And Jackie found that this is, among people that she talked to, some of her examples were from California, where gas is now, it's creeping up towards, I think, over $6 a gallon, even though for us out here it's still, over $5. But these are numbers at which it really started to make the Uber drivers question the math behind driving a gas car.
Can you dig a little bit into that math? Because that's what I always love it when you start to break it down. Because that's what this is ultimately about. You have to figure out, I guess, what are your weekly or monthly costs? And at some point, the math seems to be pointing more in the direction of electric vehicles.
Right. Jackie found some drivers who that's exactly what they did. They found that the cost for renting, either renting a Tesla or buying one outright and having their monthly payments on it, that payment was going to be lower than the cost of just filling up their former Toyota or Honda or whatever it was at the pump. And not only that, one driver that Jackie spoke to said that once she was driving her Tesla, she got even better tips. So in the end, it was a no-brainer for her.
That was so interesting to me. This driver said, before having the Tesla, basically got, $1 to $3 per ride. And then after getting this car, it was like $10 to $15 tips consecutively sometimes, Molly. Let's go more into not necessarily the math here, but incentives, because it's really interesting that these companies want their drivers to start to shift electric, because I think they've been telling this story that, hey, we are companies that are increasingly focused on sustainability. So how are they making it easier for drivers to actually shift to electric vehicles?
Yeah, both Uber and Lyft have stated a goal of switching entirely to electric vehicles in both Europe and North America by 2030. And so to help get to that goal, Uber is offering an additional $1 per ride to drivers who do switch to an EV. So over the course of a year, that could earn them as much as $4,000 through this Green Future program that Uber has. So they're definitely, laying out the incentives to get people to switch because they really do want to do this.
Molly, it's a long way to go, right, though? I mean, in terms of the number of EVs, I notice it when I reserve a car. I mean, and they give you an option, would you rather go the green route? And I think sometimes it's more expensive. But I mean, in terms of the numbers of EVs that are part of the Uber Lyft community, right now it's really small, right?
Yes, right now, in 2021 anyway, there were fewer than 1% of the ride-hail vehicles in the U.S. that were electric. That's according to Bloomberg BNF, the Clean Energy Research Group. So yes, 1%, that is definitely a long way to go to reach their goals. But I think as we're seeing, the gas prices are helping push the drivers that way. The companies are adding incentives, and probably people like you, Carol, also are just more willing to get into one of these cars. It's the better option, I guess.
But at the same time, Molly, there's this perfect storm of macroeconomic events happening right now that makes it worthwhile for these gig workers to make these investments or rent these vehicles. We've got gas prices incredibly high, and then we've got this increased demand right now for Ubers. I was at Newark Airport over the weekend coming back, and it was really difficult to get a car. We were quoted as much as $150, $175 just to get back to Brooklyn. We waited because that was just way too much money. And I'm wondering what happens, and Jackie points to this at the end of the piece. What happens if demand dies down and these drivers don't see the activity from us that they've been seeing?
Yeah, I think that is a concern. Right now, in May, where the demand definitely is still up. They're seeing, increase of 15% compared with a year ago. As people travel during the summer months, these are particularly high volume months for those companies. So for right now, it's okay. But yeah, I guess it is going to remain to see that they will have to sustain that pace in order to make this math work out over the long run. But for right now, they're saying it's worth it, and it probably is an investment in their future that at least some of these drivers are willing to make.
I think a lot too about how long an electric vehicle ultimately lasts somebody, and so that if they make the investment, do they have it for 10 years, 15 years?
We don't know yet.
Right, we don't, versus, a traditional combustible engine. I don't know. We'll have to wait and see. All right, we got to run. Hey, Molly, thank you so much. Glad we could check in with you about the story. Molly Schutz, she's U.S. tech editor at Bloomberg News, back in our Interactive Broker studio. You are listening and watching Business Week.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Tim, I'm really jealous because you're in studio with someone that I was in Panama with at the Bloomberg New Economy Gateway event.
We are talking about wine country in Argentina right now, and we're missing this conversation. We're talking all about Mendoza because, wow, there's some good wine from there that you and I have actually drunk on the show here at Bloomberg Business Week.
I love a good Malbec. All right, we're going to not necessarily talk wine. We're going to talk about debt, and we'll get to that in just a moment. First up, let's get to your top business stories and a look at the trade with about 29 minutes to go in the day. Hey, Charlie.
Indeed. Well, hello there, Carol Master. The Dow, the S&P, NASDAQ, all in the red. Speaking of wine, we've got the S&P now lower by 69 points, drop there of 1.8%. Dow Industrials down 430, decline right now of 1.4%. And NASDAQ down 300 points, a drop there of 2.6%. A lot of weakness among big cap tech names today. The NASDAQ 100 index is down 2.7% right now. Bitcoin down 2.8% to 20,320 on Bitcoin. Spot gold down $3 the ounce to $18.19, drop there of 0.2, and the 10-year up 1/32, 10-year yield 3.19%. West Texas Intermediate crude up 1.9%, 111.68 a barrel. Earlier in the day, in the early going, stocks were positive on optimism that with China cutting its quarantine period. Louise Gowdy Wilmering is a partner at Crew Partners, and she says positive news out of China was a plus for global markets.
I think overall, in order to get a good lens on what the economy is doing, we need to have China as a significant contributor opening. Certainly that will put pressure on oil and some things, but it should also maybe get some of the supply shock problems out of the system. So I think it will provide some normalization so we can see where we're going.
Victoria's Secret is joining the growing ranks of companies pledging to increase the amount of business they do with black-owned firms and to promote more black workers. The lingerie giant says it's working with the 15% Pledge organization to gather data and establish a system with the aim of eventually reaching a point where 15% of its suppliers are black-owned firms, up from about 1 to 2% currently. Victoria's Secret shares, they are down now by 6.1%. Recapping, S&P down 1.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stenovec here at Bloomberg headquarters in New York City. So as I mentioned, among the things that I love about this company is that we have reporters, bureau chiefs, truly all around the globe, and they can give you kind of firsthand, on the ground accounts of what's going on. And this includes our next guest, who I caught up with in Panama at the Bloomberg New Economy Gateway Latin America Summit. She's usually in Argentina. Today, she's in our Bloomberg headquarters in our studio with Tim.
Yeah, we're talking about Carolina Milan, who's with us in the Bloomberg Interactive Brokers studio. Very pleased to have her with us. She's Argentina bureau chief for Bloomberg News, and she's going to bring us up to speed on what's going on with Argentina, because there's some jitters when it comes to the potential defaulting. Carolina, what's going on?
Yeah, so most of Bloomberg Radio listeners are probably familiar with Argentina and its foreign debt woes. And what's really interesting about the story we're going to talk about today is that we're actually going to talk about local debt. That's peso debt. And, you know, usually people don't expect countries to default in their local currency, but that's exactly what investors are concerned about right now in Argentina. And the reason for that is that Argentina has been relying so much on local debt issuance since its restructuring with foreign bondholders in 2020 and with the IMF over the last year.
I have to say that one of the reasons I wanted you to come on, and I was so glad that you did, is I feel like, you know, we're so obviously U.S.-centric, big company, developed world, often centric. But Latin America, I mean, there's so much potentially it can offer. We talked to CEOs who are expanding manufacturing throughout Latin America. Tell us about specifically Argentina, though, and the maybe questionable, you know, ability in terms of its local debt, why we should care as investors.
Of course. Well, one of the main reasons is that in the recent years, so in the past year or so and a half, Argentina, when it sells debt locally, it sells it linked to inflation. And so that has been a way to keep investors interested. Inflation in Argentina is one of the highest in the world. I know that's a big topic globally these days, but it's been a problem in Argentina from many years now, and now it's approaching 60% annually. We're talking about 5 to 6% increases monthly.
Wow.
And so what that means is that when you have a big pile of debt that's linked to inflation, the bigger that inflation gets, the bigger that your debt load gets. And so it's becoming so large that it went from being a positive thing that made investors interested to becoming a problem.
Well, and what I find is interesting, especially when we, coming off the Russian war in Ukraine, the world is rethinking where it gets its energy, where it gets its grains, who does it really want to kind of align with? And part of the New Economy Gateway event in Panama was just thinking about the world working more closely with Latin America. But when a country like Argentina has these problems, it makes it more difficult, doesn't it?
Absolutely, and Argentina has been a difficult place to do business for many years now. One of the issues that makes it so hard is the fact that there's capital controls. So that, for example, makes it hard for foreign companies to send their dividends abroad. It makes it hard for them to make the decision to invest millions or billions of dollars, sometimes in infrastructure, sometimes in certain lines of business where they are not able to have the certainty that when they want to take the profits home, they'll be able to do so.
Carolina, I'm wondering, this is not in the story at all, but I have to ask you, since you're visiting from Argentina, give us an idea of the power of the U.S. dollar and cash in Argentina right now. Because one thing that really surprised me when I was there, 8, 9, 10 years ago, I don't even remember, is when we got there, everybody said, don't exchange your dollars for pesos. Instead, spend your USD, because it was in such high demand. The discount that we would get, whether it was a hotel or a restaurant, for paying in U.S. dollars was like 20%.
Wow.
Is that still happening?
That's a good question, and that's certainly relevant to anyone who's maybe thinking about planning a trip down there. And certainly the interest in the dollar and the power of the U.S. dollar is still very high. That's changed over the years. The last government administration removed capital controls, but they've now been back since September 2019. So the way things have shaken up, it's similar to what you're describing. But actually, what ends up happening is that there's a black market rate because it's so hard for Argentines to access the dollar. So if someone was visiting and they went through an illegal money changer, they would probably get more than twice these days the amount of pesos than they would if they use their credit card or their debit card from the US or if they use the ATM. So what a savvy tourist would do would be bring a lot of USD cash and then exchange it as they can. And hotels and a lot of businesses have networks that help people do this safely.
Yeah.
But it's pretty odd, and it's definitely something very idiosyncratic to Argentina.
I love the perspective, especially when we talk about our inflation concerns. We have to have you come back, or a member of your team, because there's another story you sent us about lithium, which is so important to electric vehicles, and Argentina has a lot of it. And so you have a lot of people competing for some of that exposure. But so glad we could catch up. Carolina Milan, she is an Argentina bureau chief here at Bloomberg News in our Interactive Broker studio. Thank you.
Let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. A senior aide to Trump Chief of Staff Mark Meadows says her boss warned her things might get real bad on January 6th. During a hearing of the House committee investigating the Capitol attack on that day, Cassidy Hutchinson said the conversation occurred on January 2nd, just after she had spoken with then Trump attorney Rudy Giuliani.
When hearing Rudy's take on January 6th and then Mark's response, that evening was the first moment that I remember feeling scared.
Hutchinson says there were 3 camps in the West Wing during the Capitol insurrection. One group, including Ivanka Trump and the White House counsel, urging Trump to condemn the violence, a neutral group, and then a third group saying that the rioters were Antifa or not our people. Ghislaine Maxwell has been ordered to spend 20 years in prison for trafficking girls in a sex scheme supported by Jeffrey Epstein. Ahead of the sentence, she heard victims describe how their lives had been devastated by the sexual abuse they suffered due to her actions. Voters are heading to the polls today in a number of states. They'll be deciding races up and down the ballot in New York, Illinois, Colorado, Utah, Oklahoma, Nebraska, and South Carolina. It's the first election since last week's landmark Supreme Court ruling on abortion rights. Texas is among the states with a trigger law regarding abortion, but it doesn't go into effect until mid-August. The state attorney general announced prosecutions could begin immediately. But today, a judge in Houston put a halt to that with a temporary restraining order. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in our DC newsroom. We just do want to point out that we're just hovering off our lows of the session. We did see the NASDAQ 100 go as low as 3%, that tech sell-off in particular, Tim, picking up momentum, but we'll have more on the market shortly. Meantime...
Speaking of a slump.
If you want to take a company public right now, guess what? You're probably not going to do it.
Yeah, companies last year defied the pandemic to go public at a record pace. It's a different story this year, Carol. Market volatility, inflation, fears of a downturn. They've brought an abrupt end to the listing party.
All right, check out these numbers, right? We love numbers, perspective. Companies have raised a combined $4.9 billion via U.S. IPOs this year. That's less than 6% of the record sum raised in the first half of last year, 2021, according to data that we compiled here at Bloomberg. While 2021's volume was an historical outlier, this year's paltry total distantly trails the $47 billion five-year average for the period. So,
oh my goodness.
Last year was huge.
We got to tweet out
but
this
still.
chart, Carol,
Yeah.
in this story, because it shows U.S. IPO volume in the first half hitting its lowest point since the financial crisis. And what it shows is quarter by quarter. And we are about to finish quarter two, okay?
Yeah.
We are not even to the number of IPOs in the first quarter last year.
Yeah.
I would say, I mean, you could count this on two hands, it looks like.
All right,
Carol.
so Ari, here, can you take this shot for me that I'm showing? I'm holding up the sheet.
This is like,
come here.
Yeah, look at, there it is. You can't even see it. It's all the way at the bottom,
Look
Carol.
at the bottom. Like, look at all the
It's
IPOs
tiny.
last year.
It's remarkable.
But these are the things. Okay, right? If you're looking at the market environment, there's so much uncertainty. We talk about it like every day. There's multiple stories about, have we hit a market low? When are we going to hit a recession? We won't hit a recession. It won't be that bad, or it will be that bad, or earnings expectations are too optimistic. They're too negative. Like, we don't know. We're still trying to figure out what our post-pandemic world is, and in a world where the Fed's going to be very aggressive in terms of raising rates.
Okay, so keep an eye on companies if they're going public, if that says something about the way they're feeling about the markets.
Don't you like my high-tech chart that I
Yeah,
put
I
up
like
there?
that a lot. That's good.
All right, more to come here on Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ at or near session lows. 76-point drop right now in the S&P, down by 2%. The Dow back below 31,000, down 485 points, a decline right now of 1.6%. NASDAQ down 330, down 2.9%. The NASDAQ 100 index down by 3%. We've got the broader market sputtering as a report showed Americans grew more downbeat about the outlook for the economy. Spot gold down $3 the ounce to $18.19, down 0.2%. Crude, though, rallying. West Texas Intermediate crude up by 1.9%, 111.66 a barrel on WTI. 10-year yield again 3.19%. S&P close to the low of the day now, down 78, a drop there of 2%. Among the names reporting after the close of trading, Progress Software. Progress lower now by 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Echoes of the 1970s and early 1980s are impossible to ignore in the UK at the moment. On top of supply-side shocks, sputtering growth, unsustainable public finances, and soaring prices, labor unrest has also been staging a comeback. Last week, strikes shut down the country's railway system and brought the London Underground to a halt. Other unions are planning strikes of their own in a threatened summer of discontent. Unfortunately, the rail strikes might be just the beginning. Pay deals offering less than the rate of inflation are expected for teachers, local government staff, doctors and nurses in the National Health Service, and others. In these and other negotiations, the government should strive to be fair. But before public workers set about bringing on the next recession, they should remember the 1970s and ask themselves whether a hobbled economy would really serve their long-term interests. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OP on Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10.5 minutes left in today's trading session. It's a rough one. It's definitely a risk-off trade. If you're a bear in this market, you might be having a better day, but not if you're trying to be a bull, especially when it comes to the tech sector. As Charlie mentioned, down almost 3% here and near its lows. So let's get to it, Tim.
Yeah, really excited to have join us Victoria Green, Chief Investment Officer at G Squared Private Wealth. She joins us once again on the phone from College Station, Texas. Victoria, great to have you back on Bloomberg Business Week. How are you?
I'm good. Well, I mean, I kind of want the markets to close.
There, finally, an honest answer. An honest answer after I asked that question. That's great. Well, we have about 9 minutes until the markets close, so you don't have to wait too long, but we're going to keep you busy until then. What do you make of it? Because we're trying to figure out what's going on. We saw a nice little bear market rally yesterday. I think it's fair to call it a bear market rally, but quite the pullback today.
It is, and we're not that surprised. We had thought this was a classic bear market rally. We'll see if that 38.15 holds. That's a pretty important Fibonacci level. Right now, you're kind of in technical no man's land. But we're not surprised because last week's rally, if you talk about the catalyst, like I look at that and say, what actually changed? Maybe, the markets hit oversold. I mean, we were at, 8 out of the last 9 weeks were negative. You know, that was basically a record. So obviously, you have kind of this relief rally. It's very, very common. But if you actually step back and say, what changed? What was the catalyst? I think you'd be very hard-pressed to find the catalyst other than, the markets got messy, so maybe some people bought, but that's really not a long-term catalyst. The Fed's still hawkish, and we're still looking at an upward climb with inflation.
Would you be telling your clients to buy at this point?
No. So we're not sellers yet. You know, you kind of have to ride the horse that you're on right now. That's a big thing.
So not selling, but not buying either.
Yeah, I think we've got a little more to go. Like, we're looking for some confirmation. We're looking for something that makes us feel better about the world. And I think right now we talk about it. It's very kind of simplistic, but don't fight the Fed, and the Fed is hawkish. So what is going to make the Fed change? Let's talk through that, right? Everybody's like, well, maybe the Fed will, we're looking at every single like pause or comma or word that they talk about now to try to say, oh, they're dovish, they're dovish. They're not dovish, they're hawkish. They're definitely hawkish, and they're going to remain hawkish until inflation's under control. And so the only thing I think that matters is, unless the liquidity locks up in the bond market like it did in 2020, the Fed put's not happening to equities. It's not coming. It's not, this isn't Santa Claus coming down the chimney. The Fed's not rescuing the stock market just because the stock market's going down.
Okay, well, speaking of picks, we want to get to some names that you sent to our team, because there's some really interesting ones in here. You don't think it's too late to buy energy? You're still bullish on energy.
I am. And we've been taking a really, really close look at that one, though. I will admit that, because we got a little worried, when oil pulled back about 20%, we kind of stress test. And, it flipped a little bit recently from the supply constraint to the demand destruction, the worry of a recession. And obviously you can do some parallels with 2008, and we all know those are some nasty, ugly charts there of what goes up came down just as fast. But we feel like right now there isn't demand destruction, and the supply constraint is a very real issue. China's reopening. We're still driving at $5 gas. I'm sorry, it's like $4.89.
Depends on where you are.
Hey,
yeah, California, you'll see it north of 7.
Oof, yeah, maybe I shouldn't complain about my $4.50 gas down here.
Can I ask you, though, Devon's up 35%. It's got a current PE of 12. That sounds a little expensive to me. And yes, it's got a dividend yield of 8.5%. That's nice. EOG Resources,
Wait,
you like
too. Did
too?
you just say 12 is an expensive PE?
That's way cheaper than that's way lower than what the S&P 500 PE ratio is. I was surprised by that too.
How are you supposed to look at the energy, though, names?
Yeah, so a lot of them you got to understand some of the fundamentals, and I'm just playing with you. Sorry, I didn't mean to call you out.
I know you were.
Pretty cheap. 12 is pretty cheap.
Hey, not as cheap as EOG, which is another one of your picks. That PE ratio is 10.5.
But I thought we're moving towards alternative energy. Like, ultimately, these guys are not going to be where it's at, right?
Eventually, potentially, yes. And I know that that's coming, right? We all talk about solar, wind, and the EV and the destruction of oil demand. And are we at peak oil demand? Possibly. And this isn't like a decade-long trade for me, but I'm looking for places to hide. This is the year you're trying to play defense. And I'm going to hide with something that's giving me an 8 to 12% cash flow yield with share buybacks. They get it out of the ground at like 30 to 40 a barrel. And so even if oil pulls back to 90, they're still massively cash flow positive. They're not investing in CapEx. They're pushing cash to shareholders. So if I'm looking for a place in 2020 to hide, now I'm still comfortable with my energy trade. I will caveat that. I don't think this is necessarily a long-term trade, but to get through a bear market, right now, I have confidence in commodities because they're able to actually pass on some of the price pressures we're feeling.
All right, let's move from energy because there's some really interesting other picks you got too. IBM is in there. You see it as a value in the tech space. Why are you bullish on IBM?
Look, so they were a misfit story, a misunderstood company. They got a new CEO in, they were really turning it, and they did the spinoff to Kyndryl with all their old legacy kind of slow growth business, and they're very focused on the cloud and hybrid cloud with that Red Hat acquisition. First off, they pay a 5% dividend. As a tech stock, they're very reasonably valued. And we look at their balance sheet, they just print cash right now, and we like companies like that. And they're very, very integrated in, and I think their revenue streams are kind of insulated, right? So even if there's a pullback, that's what I want to own right now. I want companies with insulated revenue that isn't going to fluctuate quite as much with the economy. Companies still need help with their servers. Companies are still going to have to manage their IT platforms. Somebody's still going to get paid because you still have to manage your IT infrastructure. And I think IBM is one of those companies.
It is interesting. And I think about, Tim, some of the conversations we had at Milk, and we keep going back to it. But if you're going to cut costs, you probably aren't going to cut technology because that's the backbone of what you do. And so whether it's an IBM or a Cisco or somebody else, this is where you're going to probably spend your dollars if you're a company at this point, even if things get tight. Costco, off 15% year to date. Is this the thinking that if things start to get rough, this is where people will still shop, or what?
First off, they have such great brand recognition and loyal customers, and two, I do think they're resilient. The Costco's, the Walmarts of the world, I think they've held up relatively well if you stress test them through other pullbacks, recessions, or economic slowdowns. They're kind of a deals-based store. They're trying to give you more for your money. I mean, they'll give you 20 pounds of goldfish if you wanted for like $10.
Who doesn't want 20 pounds of goldfish? It's like the perfect snack.
I do, but and so I look at where people are still going to spend their dollars, similar to how we were talking about companies still spend their dollar on technology, which they have to do, and cybersecurity and infrastructure. People still have to eat. People need to buy groceries, and sometimes you got to be looking for the discount bargains. And because Costco is not really, they have retailer things. I think you can buy a TV and a couch and your 20 pounds of goldfish all in one store,
and a car.
And a bar. And they have some pretty great Costco wines, not gonna lie.
That's one-stop shopping. There you have it. Victoria Green, we got to run. Chief Investment Officer at G Squared Private Wealth on the phone from College Station, Texas. All right, folks, just a few minutes left in trading. We're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close on this Tuesday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Riggs, Caroline Hyde back in the saddle. We're counting you down to the closing bell, and here to help take us beyond the bell, it's our global simulcast. We're joined right now by Carol Master and Tim Stenovic. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube. And Carol, we are pretty much right around the lows of the day here as sentiment shifts pretty dramatically from what we saw last week.
Yeah, pretty negative. Very much a turnaround from what we got last week. And if you're looking for a place to hide, we're going to get into the major groups and what's going on. But energy, once again, investors moving towards that sector. And that's the only one among those major industry groups, guys, that are actually showing some gains today.
Yeah, speaking of sentiment, we just had a great chat with Victoria Green over at G Squared Private Wealth. She's the chief investment officer there. I asked her how she was doing, and she was like, I'm fine, but I want these markets to close. And she kind of wants to put this behind her. Look, she said the rally last week, what we saw yesterday, a bear market rally. She's not ready to throw money in on a wide scale at this point because she thinks that you can't fight the Fed. And what's the actual catalyst that has changed at this point? Inflation, she says, still going higher.
She's buying energy names, by the way, guys.
No, she's not going to buy night shares, which is where you can be also getting exposure, even when the markets have shut, just for the sheer delight of it at the moment.
I couldn't hear. I'm sorry. I couldn't hear what you said, Caroline. I ruined it. I totally
There's
ruined it.
There's an ETF that we're about to see launched today, 2 of them, where you can gain exposure throughout the night as well, should you just wish to keep exposed, even in these times of slight strange.
And here I was thinking crypto could solve all of those problems for us when the market closes.
And I was looking at some of the data go for the month and really for the whole first half here. And we talk about how energy stocks have really kind of led the charge here. It's kind of interesting. Almost everything is really down on a month-to-date basis and a quarter-to-date basis as far as some of the groups and the sectors go here. Obviously, energy is still up massively on the year, primarily because of those gains we had in the first 3 months here. We got the closing bells here in New York. People are clapping. They're still happy. I guess they're just happy to be there because the Dow Jones Industrial Average is going to close down by about 1.6%. The S&P 500 going to close down right at the 2% level. The NASDAQ Composite down 2.98%. So we'll just round down and call it a 3% loss on the day. And the Russell 2000, not to be left out here, lower by about 1.9%.
All right, Romaine, remember we talked about teenage angst yesterday? That's what yesterday's trade kind of felt a little bit. It felt a little tortured.
Yeah, you missed this conversation, Caroline. It was,
Caroline, but ultimately, yesterday the S&P was kind of a split in terms of gainers and losers. Today, everybody's kind of leaving every sector. 436 names in the S&P are lower, 66 higher, 1 unchanged.
Carol, you really see that on a sector level. Take a look at this. Even in sort of the, quote, best performers on our screen for our radio audience, it's still all red except for one, energy. You're up 2.75%. Just incredible when you think about the momentum of energy stocks for the year, and certainly another almost 3% today. Pretty incredible. You have utilities and banks that are still the relative outperformers, but you're still in the red. And indeed, the red gets a little bit deeper, and this is sort of a classic narrative for the year as well, Carol. When you think about tech, semiconductors, software, media, auto, and then of course some of these consumer durables as well, and the retailers, as we're trying to fight out here with some of these inflationary narratives, the lack in consumer confidence, if that's hitting technology, if it's hitting durables, if it's hitting some of those discretionary stocks, those are under pressure. You're off anywhere from about 3 to 5% on the day.
All right, so let's get to some of the specific gainers. There were a few of them. Romain talked about this earlier. In the chip sector, we're talking about Qualcomm, top in the S&P 500, the NASDAQ 100. This is the biggest maker that runs chips that run on smartphones or that run smartphones. We talked about this analyst earlier, jumping. This analyst is TFC Securities, Ming-Che Kwa, whose tweets on Apple and consumer electronics orders have often moved shares of suppliers, and it moved Qualcomm today up about 3.5% after a 1.7% gain yesterday. Spirit Airlines also higher, pushing back at JetBlue and its sweetened offer, standing by a takeover bid from Frontier, saying the JetBlue revised deal doesn't address regulatory concerns and remains substantially below Frontier's projections that shares of a combined company could reach $50. So this goes back and forth. Spirit Airlines up more than 1% in today's session. They were up, though, more than 4% earlier on. And then we got to talk about the casinos. Mentioned this earlier. This is one of the standout groups in today's trading session. Las Vegas Sands and also Wynn Resorts both higher. Vegas Sands up about 1.33%. Shares of Macau stocks that trade traded higher, after China said that maybe they're going to loosen some of the restrictions for international travelers. So these are companies that own a big portion of their businesses in Macau. So that's why you saw this group trending higher today.
Yeah, some good news if you want to do some gaming in Macau, perhaps. Let's talk decliners here. No shortage of those on a day like today. We saw big tech just really take a dive today, leading the S&P 500 lower. Apple, the worst performer on a points basis. Second worst, Microsoft, down 3% today. Also keep an eye on shares of Nike. We've been covering this throughout the day, giving a downbeat forecast for the full year after those numbers came out yesterday. Those sliding sales in China, Wells Fargo, Jefferies, BMO Capital Markets, Cowen, among the banks to cut their target on the company's stock after the results. And Boston Beer, ticker SAM, we're just not drinking hard seltzer. We weren't drinking it a year ago. We're not drinking it now. It's got analysts very concerned. The latest is Goldman Sachs downgrading the company's stock. But look at that, down 4.4% today.
All about the hard cider instead.
Yeah.
Meanwhile, let's have a look. Let's have a little look at what was driving up hard today. I mean, I'm looking at an FX market that clearly is evidence of the risk aversion that we've got in the market at the moment. The Bloomberg Dollar Index up almost 0.5% stronger versus every major currency pair, basically. And we're seeing weakening in the Kiwi, weakening by 0.9%. We're seeing the euro off by some 0.6% at the moment. This as we once again question really the rebalancing trade that's happening, and some saying that that's helping the dollar towards the end of the month. But really how much we're seeing once again the tension, the worries about a global slowdown, about that consumer sentiment that really hit the commodities space hard. Copper had a reversal. We had been trading higher. Metals got this lift higher. Maybe you still saw that being reflected in the steel price that you look at right now because of China, the reopening trade, the hope of the shortening quarantine. That all reversed the minute you got that confidence data that showed the lack of it from the US consumer perspective. Brent crude, though, managed to shrug off some of that. We saw overall 2.5% higher on oil across the board. WTI crude up some 2% as we're worrying more about the supply side, worrying more about perhaps a curtailing of Russian supply, in particular the price caps that G7 are currently discussing. And I look at a world of yields pushing higher in Europe. Netherlands up 8 basis points, Danish yields up 10 basis points. We saw, interestingly, on the back of that NATO news, Finland 30-year, we're saying overall yields push higher, but not the case in the US, Taylor.
Yeah.
Indeed not. Romain, do you want to step in here with some news?
Yeah, just some breaking news here. This on Pinterest looks like we are looking at a potential change here in the CEO, excuse me, I just want to make sure I got this right again. This is based on a reporting by Dow Jones. Wall Street Journal, Pinterest CEO is stepping down. That's the head of the company stepping down here. Ben Silbermann, who co-founded Pinterest back in 2010 and has been its CEO ever since, is now going to transition to an executive chairman role. They're looking for a new replacement, and they have one. His name is Bill Reddy. He comes from Alphabet, and where he led Google's commerce operation since 2020.
Good to note that is, again, as Romain mentioned, similar to a Dow Jones story. We haven't independently verified this. We will work on that, of course, here at Bloomberg News. In the meantime, Caroline, you came to me on yields, and I think what is so interesting when we think about a risk-off nature in NASDAQ 100, as you mentioned, that's off 3%. How do we think about this bond market? And not a classic safe haven today. Yields are actually pretty unch and calm across the curve. And Carol, I think what's so fascinating about this is we talked about the double header yesterday, the week 3s, the week 5s, and of course coming today with another week 7s. And the fact that you're having to get some of these concessions into some of these auctions is showing some of the perhaps lack of demand, maybe yields haven't peaked. We did hear from Paul Christopher, of course, over at Wells Fargo, saying you need inflation and yields to peak before you can start to really get some interest here, and perhaps maybe that's what you're seeing.
I think it's just, I got to go back to Pinterest. I just think, companies are making decisions, right? They're looking at their business models. There's pressure. I think people have questions about what's going to come. And you're looking at a company like Pinterest, which is rallying the after hours, down 78% since its February 2021 high. At some point, you have to say, wait, does this work? It's not working. What do we do?
And I think it's too. I mean, we talk about this, the idea that a lot of what's going on out there hasn't necessarily shown up in the data, at least in full. This drip of layoffs and hiring freezes. Something that I thought was interesting, I'm just going to throw this out there. Manitowoc, which is the big crane company, they just came out with an interesting statement where they talk about how they've actually been really hit by inflation. They've had a lot of price increases. They actually said they're going to pull out of a big expo. This is the Cone Expo. Wow. It's a huge deal. They're basically saying that, in their words, that it doesn't seem appropriate to invest in a large trade show at this time, given the inflationary pressures. Now, I don't know how much it costs for them to pull off a trade show like this, but the idea that companies are so focused in on any little cost that they can sort of trim back in order to sort of get through this time, I think is very telling.
Yeah, that along with rescinded offers, cancellation of actually hiring people, layoffs, of course. These are the tightening financial conditions, perhaps, that the Fed is looking to see as a result of interest rates going up.
It's the kind of things that, right, when companies start to report earnings, we want to know the intricacies and what kind of decisions they are making, where to spend the money or not spend the money in this tricky environment. All right, guys, that's a wrap. We got to run. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. We call it Beyond the Bell. We'll be back same time, same place tomorrow.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser, Tim Stenovic here at Bloomberg headquarters. I think, just wrapping up with our TV colleagues and just going through the market. And of course, it was a rough market, a risk-off trade once again. We've got some economic data points coming. But what Romain talked about Manitowoc and pulling out of an expo, who knows the reasons why, but companies are going to be making decisions. We just had our market guest who talked about Victoria Green over at G Squared Private Wealth. She likes IBM because companies are going to still be spending on tech. You're going to start making decisions, or decisions maybe I don't hire colleagues, or add on to our workforce because we're worried about the environment to come, at least for the next 6 to 8 months.
Okay, the quarter wraps up this week, Carol. That means we're going to start, the books are closing. That means we're going to start to hear from these companies as they report their most recent results. We're going to get a lot of insight into how they're thinking about the economy. And then again, I draw our attention to the backward-looking jobs.
All right, let's get to World and National News. Nancy Lyons, take it away.
Thanks, Carol. The January 6th House Committee today heard from a top former White House aide during today's abruptly scheduled hearing. Cassidy Hutchinson worked for Trump Chief of Staff Mark Meadows. She says on January 2nd, former Trump attorney Rudy Giuliani told her they were going to the Capitol January 6th, and it was going to be a great day. She then talked about it with Meadows.
I just had an interesting conversation with Rudy. Mark, sounds like we're going to go to the Capitol. He didn't look up from his phone and said something to the effect of, there's a lot going on, Cass, but I don't know. Things might get real bad on January 6th.
Hutchinson also testified Trump wanted to go to the Capitol and even grab the steering wheel of his security detail. The White House is in a race against the anti-abortion movement, but many people on both sides of the debate are wondering what comes next.
Senior Biden administration officials are dialing up pressure on both healthcare providers and insurance companies, including forceful reminders that they still must comply with federal law on contraception and emergency care, like when a woman is having a miscarriage. This, as Justice Clarence Thomas suggested in his concurring opinion, that there is no constitutional right to contraception access. Anti-abortion activists, meanwhile, are split over whether abortions should be banned, even in cases of rape and incest. In Washington, I'm Amy Morris, Bloomberg Radio.
Ghislaine Maxwell has been sentenced to 20 years in prison in the Jeffrey Epstein sex abuse case. She was convicted last December of recruiting and grooming teenage girls to be sexually abused by Epstein. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in D.C., Carol Massar, Tim Stenovic here at Bloomberg headquarters in New York City. So this is certainly trending high on the Bloomberg, and it has to do with Cathie Wood, who today said that she erred in her prediction that inflation would unravel as the prices of goods and services in the U.S. soared to a 40-year high, and said the U.S. economy is currently in a recession. So she said, basically, I got the inflation duration wrong. She can join the crowd, right? There's many people, I think, in terms of inflation concerns that didn't make a good call.
Paul Krugman on Friday on our air, basically saying that. He was very quick to admit, I should say, that he got that call wrong too. Here's what Cathie Wood told CNBC a little earlier. Quote, "We were wrong on one thing, and that was inflation being as sustained as it had been. Supply chain," here's what she said, quote, "I can't believe it's taken more than 2 years, and Russia's invasion of Ukraine, of course, we couldn't have seen that. So inflation has been a bigger problem, but I think that it has set us up for deflation."
Yeah, that's interesting, right? So
she's told you about this in the past, right? Her theories about us being in a deflationary environment right now.
Yeah,
or soon.
Yeah, exactly. She has talked about this, and she does look at the market. We've talked about it a lot in terms of longer term bets, innovation, disruption, and talks about how some of these things I think ultimately will bring kind of prices down. But while you're going through it, it's uncomfortable. And she also agreed with others who say that we are in a recession. She says the consumer is really against some of these price increases. Many people think, oh, the heavy spenders will keep this thing going. Consumer sentiment in the highest income groups is lower than in the lowest income groups, and the latter group is being tormented by food and energy prices, which are really a regressive tax increase, she said.
She did say earlier this month, when she was speaking to Ed Ludlow, she said that she's never seen inventory surges like this in her career, and she's been around for a long time. Those are her words. She said this inventory issue highlights the cyclical reason we've been saying we think inflation will unravel. So as soon as 3 weeks ago, she was saying this.
Yeah, and what's interesting is, especially retail, they've been building up inventories because they're worried about not being able to have enough merchandise on hand. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Earnings miss after the bell from Progress Software. Progress forecast adjusted earnings per share for the third quarter, and that guidance did miss the average analyst estimate. Moments ago, we got word that Pinterest CEO Ben Silbermann is stepping down. This according to Dow Jones. Alphabet's Bill Reddy will become Pinterest's CEO. After hours, we've got Pinterest shares up now by roughly 3%. A down day on Wall Street. Losses extending into the close. The Dow, the S&P, and NASDAQ all declining today. Big tech led the way lower today. We had the NASDAQ 100 index dropping 3.9%. The NASDAQ Composite Index was down 3% today, down 343 points. S&P down 78, a drop of 2%. Dow Industrials down 491, a decline of 1.6%. 10-year yield 3.18%. Spot gold down 0.2%, 18.19 the ounce, while West Texas Intermediate crude oil was up 1.9%, 111.69 for a barrel of WTI. Recapping, 10-year yield 3.18%. S&P down 2% today, down 78 points. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. Well, earlier this month, we noted that the food truck startup Wonder, although I'm not sure that that's quite the exact perfect description, but we'll get into that in just a moment. It is led by Jet.com founder Mark Lowry. It has raised $350 million, bringing its total fundraising haul to just under $1 billion in a market where checks are getting harder to come by. It's been, we know, a very volatile market. Latest funding raise giving Wonder a $3.5 billion valuation, according to people familiar with the matter. So we wanted to get an idea of a little bit more about what this company is all about and what they're going to do with all that money, Tim.
Well, we've got the CEO of Wonder, Scott Hilton, joining us on Zoom from Parsippany, New Jersey. Also the former chief revenue officer of the U.S. e-commerce at Walmart. Scott, great to have you with us. How are you?
Good. Thanks for having me.
Well, it's great to have you here. Okay, so Carol lives in New Jersey. I don't know if she lives in a part of New Jersey where Wonder operates, but it's based in New Jersey right now. And she described it as a food truck. And at its core, that's what it is, but it's also so much more. So how would you describe Wonder?
Yeah, so food truck, that's kind of the first thought that people have, but it really is something completely different. So what we are is it's on-demand dining. So customers can order via an app. They have access to a range of restaurants from everyday food, pizza, burgers, all the way up to fine dining like Bobby Flay Steak. As soon as they order, a mobile restaurant will show up at their location and cook that food hot and fresh right there at their location and serve it to their door. So within minutes after ordering, they can enjoy really a restaurant quality meal wherever they are, at their home or at a park or at work.
I'm so in after getting delivery after delivery that's cold and not at all. Even if it's from a great restaurant, it just doesn't fly. So tell us about the growth that you're seeing. Give us an idea of the metrics. Who are your customers? Where you're seeing the growth, and what you want to do with all this money.
Yeah, so we serve 22 towns now in New Jersey. It's about 132,000 households. And it ranges in all demographics, from something that looks more middle America all the way up to a little bit wealthier towns. All those towns are growing. The customers have been really going crazy for this. We have really high scores, and it is truly a great experience. It was one of the reasons that the company was founded is looking at the delivery platforms, Uber Eats, DoorDash, et cetera. They were growing like crazy before the pandemic. But the customer experience was really lacking. There was the quality of the food problem, cold or kind of moist food as it steams on the way to the customer, as well as just having access to those great restaurants. So that's really at the core of what we're trying to solve, and it's working in all segments. And so we're continuing to expand. Most of the money that we've raised is going into the mobile restaurants themselves, the fleet.
Okay.
As well as just covering normal operating expenses. But the bulk of the money is for expanding and going and using it for the mobile restaurants.
One thing that caught my eye, though, in reading about this a few weeks ago in the Wall Street Journal is that Mark Lowry said to the Wall Street Journal that the company aims to have a national footprint by 2035. That's many years away. And I mean, You've worked at several different companies in that time period and the number of years that it would have. I think Marcus probably started and sold 2 different companies for hundreds of millions of dollars and several $billion in that 13 years that it would take to get to 2035. Why such a long period of time?
Well, we're starting here in the Northeast, in the tri-state area, and we'll, for the time being, be focused there as we grow out. But very quickly, how we've structured this model is we've been building out the infrastructure. It actually has taken us years to get the methods figured out of how to do this. We prep and par cook our food in fairly large-scale central kitchens. That food is sent out in a cold chain to this fleet. We can do that in parallel, in many cities. So as we continue to grow, we'll be opening up different areas simultaneously across the country. But it just takes time to kind of get that infrastructure going before we, start to scale beyond the Northeast.
What's the trickiest part of it? Is it people? Is you talk about this infrastructure that, takes a while to set up. What is the trickiest part?
There's no single thing that stands out. If you asked me that same question maybe 2 years ago, it was, could we actually create this incredible food in this process? And the answer is hands down, yes, we can do it. And so after that, it's really just more kind of vanilla flavored execution. It's not to say that there's not a lot of hard parts, but we have a fleet production capability. We build these mobile restaurants, upfit them ourselves, as well as outside parties do it for us. Scaling the food production, hiring the labor. So far, we haven't bumped into anything that really stands out. It's just a bunch of little things.
What about prices? It sounds like something great to do for a party, but how much does it cost to bring a Bobby Flay steak to your house?
Yeah, so Bobby Flay that's our most expensive restaurant. That's definitely a fine dining experience, and we see people doing it as a special occasion. For example, Bobby Flay steak went crazy on Valentine's Day, but we serve all the way down to sort of, like I said at the beginning, burgers, pizza. One of our restaurants, a couple of our restaurants, we serve family style. It's even more affordable. We have 2 currently, and we're going to be offering more. But one of is taqueria. It's effectively a taco bar. You can, it feeds a family of 4 to 5. You pick your proteins, like carnitas or chicken, you side of rice, side of beans, corn. You can add on guacamole. But that goes for $50. So it's very affordable.
That is
50 per meal or 50 for the whole truck?
50 for it's a family style, so it feeds 4 to 5 for $50. Yeah.
Wow.
That's pretty amazing. We're going to talk a little bit more about it because I'm more curious because I know the food industry, sometimes the margins are so slim. So I'm curious about how that's playing out. We're going to come back with Scott Hilton. He's Chief Executive Officer of Wonder, former Chief Revenue Officer of the U.S. e-commerce business at Walmart. He's with us from Parsippany. Our conversation will continue. Tim Stanovic, Carol Masser. This is Bloomberg Business Week.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, Tim, full transparency. I just joined the app for Wonder because I'm just so curious about this.
Well, I asked Ari to go get me a snack because I was hungry thinking about a Bobby Flay steak.
Oh, my God. I've been going over the app. The food looks amazing. We're going to come back to the CEO of Wonder, Scott Hilton. He'll be back with us in just a moment. In the meantime, back to your top business stories and the market day, the close with Charlie Pellet.
Hi, thank you very much. And here's what's going on. Carol Master waiting for a rolling bar to show up to my house. That would be a lot of fun. We've got the Dow, the S&P, NASDAQ lower today. A sell-off in big tech weighing heavily on stocks. Gains in the broader market sputtered as a report showed Americans grew more downbeat about the outlook for the economy. Victoria Green is Chief Investment Officer at G Squared Private Wealth. And right here on Bloomberg Business Week, she told us, do not misinterpret the Federal Reserve.
They're not dovish, they're hawkish. They're definitely hawkish, and they're going to remain hawkish until inflation's under control. And so the only thing I think that matters is unless the liquidity locks up in the bond market like it did in 2020, the Fed put's not happening to equities. It's not coming. It's not, this isn't Santa Claus coming down the chimney. The Fed's not rescuing the stock market just because the stock market's going down.
And today we saw the stock market go down with the Dow dropping 491 points, down 1.6%. The S&P 500 down 78, a drop today of 2%. NASDAQ down 343, a drop there of 3%. 10-year up 5/30 seconds, 10-year yield 3.17%. Spot gold 18.19 the ounce, a drop of 0.2%. West Texas Intermediate crude up 2.2%, 112.01 a barrel on WTI. After the bell, we learned that Pinterest co-founder and CEO Ben Silbermann will step down from his post effective tomorrow and will be replaced by Bill Reddy, an executive at Alphabet's Google, shares little change right now after hours. Progress Software down by about 3% post-market trading after forecasts for third quarter adjusted EPS and adjusted revenue fell short of the average analyst estimates. Again, recapping, S&P 500 index down 78 today, down 2%, 10-year yield 3.17%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It's official. I'm on the wait list, and Wonder's going to let me know when they are near my home. So I'm kind of looking forward to that.
Just ask Scott when it's going to be. He'll tell you now.
All right, Scott Hilton, Chief Executive Officer at Wonder, former Chief Revenue Officer of U.S. e-commerce at Walmart. When will you come to Jersey City?
Can't give a specific date, but it will be probably in the next couple of years. Right now, we're headed north to Bergen County. We're right now in the Westfield area, serving 22 towns around there, and then we're headed north.
All right, well, that's where I grew up in Bergen County. I get it. Like, I was thinking about how this works, and it's probably easier, right, for your trucks to pull up somewhere where they can easily park. You've also got a neighborhood that's, to be fair, a wealthier neighborhood where they can do this. I mean, I'm curious about the metrics and how you kind of price this all out. How do you cover costs, and where do you kind of, where does profits come from ultimately? Is it just building it up on volume? How does this play out?
No, actually, in this business, the margins in food are really, really good. Very different than say, retail. When you're looking at, say, a typical restaurant, they're looking at a food cost that's maybe 25%, in some cases 30%. So you're starting off with really good margins. And we're verticalized. We own this whole thing. We're developing the processes for the food. We prep it in our own facility. So we've got a nice, healthy, juicy variable profit. And that's how we get it to work. It's very different than if you're a logistics player like a DoorDash or Uber Eats, where you're really just trying to take a cut, or even in retail, you're not getting as healthy a margin as you see in the food industry. And by the way, you see that in the multiples that restaurant chains, the big restaurant chains get. They're typically 3x multiple on their top line versus retailers that typically get 1x. Companies like Amazon obviously get a little bit of an extra kicker there because they're the platform play, high growth. But restaurant chains have really, really healthy margins.
I'm just going to tell you, we have a restaurant row in downtown Jersey City, and it's all about restaurants, and there's lots of space, and it would be a perfect fit.
No, tonight, Carol?
I'm not trying to sell you or anything.
Hey, Scott.
Any night.
Scott, it's interesting. I wonder what the competitive moat here is. What if somebody's listening in California right now and says, hey, this is a great idea. We know that Wonder's not going to be here, for 5-10 years. I'm going to start doing this. Why won't they? Why won't they succeed like you?
Yeah, well, we may be in California before 10 years, but the reality is we've been at this for years and have spent an enormous amount of energy. It's definitely not for the faint-hearted. We have to deconstruct every single dish and get them to work in this process. And it's getting them to work means having amazing food quality, but also being able to serve it at the speed that supports the profitability, because we definitely want to move food through the mobile restaurant in a at fast pace so we can get on to the next customer.
What did you learn from your e-commerce experience, whether it's Walmart or elsewhere, that applies to what you're doing now? Or what you're doing, do you kind of throw out the old rules completely?
Well, look, every situation, you really have to tailor it to what's going on and what the business is. There's some general rules of thumb that always apply, is making sure that you, first of all, have a good strategy, in terms of being able to execute on it and having economics work out. But after that, it's really getting the right team assembled. We've got some of the best team members that have stayed with us from company to company that we've been on this journey, as well as making sure you got the right structure so the teams work well together. Every team member needs to be in the right position, and that's the only way you can really scale and grow it quickly. You have to get that foundation right first.
Okay, so speaking of scaling and growing quickly, we got to ask, Mark Laurie sold Jet.com years ago to Walmart for $3.3 billion. Before that, Quidsy, the diapers.com, to Amazon for $500 million. Before that, he had a company he sold to Tops for a few $million before the year 2000. What's the future for Wonder?
Look, this really has unlimited potential. We're not planning to sell this thing. It's got a lot of runway, a lot of upside, which is why we were able to raise that most recent round. There's a lot of runway left, so we're going to build it out.
All right, 30 seconds. What keeps you up at night?
I sleep pretty well.
Oh, come on. Come on. All right, if you had to pick
I'll have
one
what he's
thing,
having.
if you had to pick one thing, and we've only got about 20 seconds left, what would it be, though? You talk about workers. They're not cheap nowadays. Just quickly.
No, they're not. They're not. And it's fortunate why we have the margins. We pay really well. And it's a fun job. The people that operate our mobile restaurants get to be, run their own restaurant and serve customers. It's kind of fun. We, as leaders of the company, we do a lot of ride-alongs with them during the evening to see what's going on. And it's kind of a fun role.
We should do a ride-along, Carol.
One time.
We'll do a ride-along with that.
Yeah, food included.
Yeah, I was just going to say the doggy bags must be pretty impressive. Come back to us, Scott. Let us know how things are going. And especially, I'm going to wait for that email about when you guys are in Jersey City. Scott Hilton, CEO at Wonder, joining us via Zoom from Parsippany, New Jersey.
And then you're going to invite me over for dinner that night. That's going to be the finally master pizza night, okay?
A road trip.
All right, let's go to Washington, D.C. now for a check latest world and national news. Here's Nancy Lyons.
Thanks, Tim. House members on the January 6th committee heard testimony from someone who was with former President Trump during the rally ahead of the insurrection. Cassidy Hutchinson was an aide to Chief of Staff Mark Meadows and told lawmakers Trump was upset that the crowd was not larger, and was told that people didn't want to go through the magnetometers, or mags, another name for metal detectors.
I was in the vicinity of a conversation where I overheard the president say something to the effect of, I don't effing care that they have weapons. They're not here to hurt me. Take the effing mags away. Let my people in. They can march to the Capitol from here. Let the people in.
Hutchinson says Trump wanted to go to the Capitol and even grabbed the steering wheel and had an altercation with a security detail. Health and Human Services Secretary Javier Becerra says his department will work to assure abortion availability after Friday's Supreme Court decision overturning Roe v. Wade. Becerra criticized the court's decision and says he'll make sure the abortion pill is accessible.
The Supreme Court's decision will result in worsened health outcomes and death for some patients. Working to increase access to this drug is a national imperative and in the public interest.
Becerra says HHS is directing agencies to ensure that all healthcare workers are well trained in providing family care. Jeffrey Epstein's associate, Ghislaine Maxwell, has been sentenced to 20 years for her role in the scheme to transport and traffic underage girls, some as young as 14. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. Carol Massar, Tim Stenovic here at Bloomberg headquarters in New York City. Although, I'm wondering, Tim, did you get your contract extension?
Yeah.
Just checking.
No. Did you get yours?
No comment.
Yeah. Okay, so let's talk a little bit about what's going on. We're talking about Disney CEO Bob Chapek. His contract was extended by 3 more years. A nice nod from the board, giving a vote of confidence to a CEO who's battled controversy and a crippling pandemic. Gosh, you know what? Bob Iger stepped down in hindsight.
Oh, my God.
That was the best time, right? Right before the pandemic. And then, you know, in China, Disney had to close its parks there in the early part of the pandemic. And then, of course, it wasn't, you know, it was a pandemic around the world, of course.
Yeah.
And then Disney had to quickly move to streaming, which it did. And now it's facing the challenges here closer to home in Florida.
Yeah. I mean, I feel like Chapek, there's definitely several books there. He could write a book just about the last couple of years since he's taken over. I mean, he's only the 7th CEO in Disney history. He's 63 years old. He's had a nearly 30-year career at the company. And as you said, becoming the chief executive just weeks before the theme parks and studios were shut down by that pandemic. But he has dealt with a lot of it, a lot of problems, certainly at the company, that major shift. And shares of Disney, I guess they rose slightly in extended trading after the announcement today. This came out after the closing bell. But it is interesting. And you do, you know, if you're a board at this company, you're watching what he has handled, right? And really been able to facilitate a major shift at the company. And at some point, you know, this is a company that I think prizes continuity and tenure at a company.
Okay, Carol, I saw this article earlier by Ryan Vlastelica here at Bloomberg News. He writes about the markets. Think back to 2018, Netflix surpassed Disney for the first time in market cap.
Yeah.
With Netflix's 70% decline this year, it's now half the size of Disney. Disney's more than twice as big as on market cap basis.
Yeah, listen, right? This recalibration that we continue to see in our world. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. An FDA panel says COVID shots should get an Omicron-targeted update. Also, Tesla is laying off hundreds of autopilot employees in California. That headline breaking now on the Bloomberg Professional Service. Progress Software shares down 1% in post-market trading after forecasts for third quarter adjusted EPS and adjusted revenue fell short of the average analyst estimates. A big rout in tech stocks today. Gains in the broader market sputtered as a report showed Americans grew more downbeat about prospects for the economy. S&P down 2% today, down 78 points. The Dow down 491, down 1.6%. NASDAQ down 343, a decline of 3%. 10-year yield 3.17%. Spot gold down $2.39 the ounce to $18.20, a drop there of 0.1%. West Texas Intermediate crude up 2.2%, $1.12 a barrel on WTI. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We wanted to wrap up on this Tuesday with a check on the latest when it comes to the January 6th investigations. And a former aide to then President Trump's last chief of staff, Mark Meadows, did testify today before the House committee investigating the deadly January 2021 insurrection at the U.S. Capitol. Someone who's been following it all along joins us now, Tim.
Yeah, we're talking about Billy House. He's congressional reporter for Bloomberg News, joining us on the phone from Capitol Hill. Billy, we know you're busy, so really appreciate you taking the time. I got to listen to a good portion of Cassidy Hutchinson's testimony. I got to tell you, it was gripping, it was riveting, and she went from being, I think it's fair to say, somebody who many people had never heard of as of yesterday to essentially becoming, I think, in political circles and perhaps nationwide, a household name.
You're absolutely correct. I mean, her testimony came after a day in which they tried to shield her identity, knowing how explosive what she had to say would be, and likely the anger that she would generate from Trump loyalists. But it was devastating to Trump what the account she laid out, including his wanting to march to the Capitol with the insurrection, knowing that some of these people were armed. And that was one of the big revelations.
Hey, I want to ask you, because one of the things I was thinking about, John Dean, Richard Nixon's lawyer, he has said or had said that ahead of not knowing who was going to testify, said it better be a big deal, that the Watergate scandal, kind of sent the bar high in terms of what's, kind of the smoking gun, if you will. And he talked about Alex Butterfield when he revealed that there were tapes of Richard Nixon. Was that akin to what we got today?
Well, again, history will decide that. But what I will say is she delivered far more than many people, a lot more than many people expected, and she did deliver some potential criminal angles for this committee to refer to the Justice Department. If Trump and his inner circle knew and were conscious of the fact that many of these rioters were armed and yet still encouraged them to go to the Capitol, and as we know, some officers were really significantly injured and some died. So, I mean, that'll all play out. But yes, this far exceeded, I think, what many people expected her to produce today.
She also shared the anecdote that the president grabbed for the steering wheel and lunged at a Secret Service agent when he wasn't permitted to travel to the Capitol to join said insurrectionists on January 6, 2021. As you, Stephen Dennis, and Mike Dorning wrote this afternoon. Billy, I'm wondering what the implications of this are for former President Trump. What are the consequences he could face as a result of the January 6th panel, and specifically this testimony, and not just President Trump, but somebody like former White House Chief of Staff Mark Meadows?
One of the big big lines in her testimony was that she recalled she was hearing that the former president said he didn't care if they were armed; they aren't going to hurt him. And that, including that episode that some might seem humorous, but actually others might seem scary, he did try to grab the steering wheel and was, kept away from driving his car, or at least her testimony says that, and leading this crowd of some armed people to the Capitol.
You know, Billy, I think about this as these hearings go on, and you know, is this about, you know, I think about the public, the American public hearing this or reading about it and just saying, okay, well, you know, this is a president, former president that was erratic and, you know, often did unpredictable and what some would describe as unpresidential things in terms of his actions. Is this just more of that, or is it something that takes us much further?
I think it depends on who you talk to. There certainly are people who just want Trump to go away in both parties, just want him to disappear. Others say, of course, that he will never go away or disappear unless the country takes some action against him to prevent him to run for office again or whatever. And then he has his supporters in the party, obviously, where he's still very strong, still running very high in the polls, though there seems to be some slippage. So we're still very much a country divided on what this committee is producing and what should result from it.
Billy, what's remarkable, and look, Billy, you were there on January 6th, correct?
Yes.
You were there.
Mm-hmm.
You know what you saw.
Mm-hmm.
And I'm just curious from your perspective. We haven't seen a host of Republican lawmakers come out against the former president and demand consequences here. In fact, we've seen the opposite. We've seen Liz Cheney, because of her role in the panel, essentially get primaried and get pushback from President Trump and his allies. I'm wondering if after today, perhaps we start to see that shift from elected Republicans say, wait a second, we do not want to continue to align ourselves with this guy.
Well, you're absolutely correct in describing it the way you are. I think there are probably some Republicans today they're saying, woo, I'm glad I wasn't on that committee having to defend this guy. But, of course, there was no defense. And I think you're seeing in some of the races across the country a little slippage among those who don't want to be tied to Trump. Yet, I mean, there are a far greater number of people running for Congress, for instance, that still want his endorsement, still find that valuable. And so we'll see as the hearings continue how much farther that slips or if it matters, really, these hearings.
So, Billy, as you watch these hearings, I don't know if you're actually in the room, but I am curious about kind of mood sentiment, you know, as this is unfolding and you're watching it, you know, minute by minute, second by second. What strikes you?
What struck me was that Cassidy Hutchinson entered the room very quiet. The room got very quiet. They had all heard about this 25-year-old but didn't really know anything about her. And she began very soft-spoken, a little bit nervous. But by the end of the midway break, there was actually a little bit of applause coming from the back. And she seemed to get stronger as the hearing went on. And I think by its conclusion, the committee members themselves felt very happy with what had occurred. I think she was very proud of herself. And I think most of the people in the room were going, wow, we've just watched something that doesn't happen ever, hardly, in Washington.
30 seconds, Billy. What comes next here?
Well, we have another 2 hearings. They're still not, at least, but they're still not planning to hold any of those till July. One will focus on whether they can link Trump to these fringe right groups. And then the final coup de grace would be focusing on Trump entirely as he was in the Oval Office that day watching things unfold.
Watching history in real time, or the analysis of history in real time. Billy, thank you so much. You really had a front row seat at all of this and have been so kind in sharing your observations. Billy House, congressional reporter at Bloomberg News, joining us on the phone from Capitol Hill. Tuesday. It's Tuesday, Lemon.
It's only Tuesday, and this is not a short week. Next week is, Carol. But who's keeping track?
It is a shortened week next week. Oh, my goodness. All right, everybody. We've got a bunch of economic news coming your way the rest of the week. For Tim Stanovic and our Business Week team, have a good and safe evening. I'm Carol Nasser.